In this video, we're analyzing Pinduoduo stock, ticker symbol PDD. Pinduoduo is a leading e-commerce company in China and the world's largest social commerce company with 643 million monthly active users. What makes Pinduoduo unique from other e-commerce businesses is its feed-based format. Usually in online shopping, consumers shop with an intent of what they want to buy using a search-based inventory index model. In contrast, Pinduoduo's mobile-first, feed-based format allows consumers to discover new products through recommendations. This represents a virtual market where consumers browse a variety of products on the platform while interacting with one another through Pinduoduo's social features. To provide a fun and interactive shopping experience, Pinduoduo includes games, live streaming, and promotions to encourage user interactions, sharing, and platform engagement. A key social aspect of Pinduoduo is its team purchase model. Buyers can make team purchases by inviting their friends, family, and social contacts to form a shopping team, which will reduce the price of the product being bought. As a result, buyers on its platform actively introduce Pinduoduo to their friends, family, and social contacts, and its platform is able to effectively convert users into buyers as they are more likely to click on links shared by existing social contacts. New buyers, in turn, further refer Pinduoduo's platform to their broader family and social networks, generating low-cost organic traffic and frequent interactions, leading to the exponential growth of its customer base. In just 4 years, Pinduoduo's monthly active users have increased from 0 to 643 million. Pinduoduo is also a pioneer in the consumer-to-manufacturer business model. Not only is the team purchase model an efficient tool for user engagement and expansion, it also provides Pinduoduo with data to improve supply chain efficiency. Pinduoduo can channel user preferences based on its predictive model to merchants so that they can adjust their production and sales plans accordingly. As a result, upstream suppliers can be more connected and better informed of consumer demand. In agriculture, Pinduoduo helps to facilitate direct sales between small-scale farmers and consumers. Farmers in China have traditionally relied on layers of distributors to market and sell their produce to consumers, which can be inefficient. By making recommendations to consumers, Pinduoduo can aggregate demand, thereby generating large volumes of orders for farmers. The large demand helps farmers to directly sell to consumers without going through layers of distributors, thereby improving the overall supply chain efficiency and reducing cost. When it comes to making money, Pinduoduo has two main revenue streams. 1. Revenue from online marketing services, and 2. Transaction services. The majority of Pinduoduo's revenue comes from its online marketing services, which make up 89% of total revenue. Pinduoduo provides online marketing services which allows merchants to bid for keywords that match product listings appearing in search results on its platform and advertising placements such as banners, links, and logos. The placement and the price of ad placements are determined through an online bidding system. Transaction services make up the remaining 11% of Pinduoduo's revenue, in which Pinduoduo charges merchants fees for transaction-related services that it provides to merchants. As part of its continued efforts to improve user experience, Pinduoduo rewards merchants who sell high-quality products and provide superior services with better fee rates. Moving on to investors, Pinduoduo's strategic investors include Tencent and Sequoia Capital. Tencent in particular is a major partner since Pinduoduo has access to Tencent's 829 million monthly active users on its WeChat mini programs. WeChat mini programs make it easy for users to access Pinduoduo's platform within WeChat, driving additional user traffic. Tencent owns a 16.5% ownership stake in Pinduoduo, making it the second largest shareholder in the company. In terms of management and ownership, the founder and CEO of Pinduoduo, Colin Huan, has a 43.3% stake in the company. However, he stepped down in mid-2020 and was replaced by the former CTO. Next, we'll highlight some key financial numbers from Pinduoduo's 2020 third quarter earnings report. Gross merchandise value, or GMV, in the 12 trailing months was $214.7 billion, an increase of 73% year-over-year. Active buyers in the 12 trailing months were 731.3 million, increasing 36% year-over-year, and annual spending per active buyer in the 12 trailing months was $293.60, increasing 27% year-over-year. In terms of revenue, Pinduoduo generated $2.1 billion in total revenue, increasing 89% year-over-year. This was driven by an increase in revenue from online marketing services. Revenue from online marketing services was $1.9 billion, increasing 92% year-over-year. This increase was primarily due to higher advertising demand from merchants on its platform, given continued advancement in its brand and market position. Revenue from transaction services was $200 million, increasing 66% year-over-year. This was primarily due to the increase in gross merchandise value. Total cost of revenue was $480 million, increasing 78% year-over-year. This increase was mainly due to a higher payment processing fee, higher cost for cloud services, and other expenses directly attributable to online marketing services and other revenues. For Pinduoduo's operating expenses, sales and marketing is its largest expense at $1.5 billion, increasing 46% year-over-year and representing 69% of Pinduoduo's revenues. This was primarily due to an increase in advertising expenses and promotion and coupon expenses. However, as a percentage of revenues, Pinduoduo's sales and marketing expenses have been slowly decreasing. Gross profit margin was 77%, increasing from 75% from the same period last year, and non-GAAP net profit was $68.7 million, compared with a net loss in the same quarter last year. This was significant for Pinduoduo as this was its first quarter of net profitability since its IPO. Finally, taking a look at the balance sheet, Pinduoduo's cash equivalents, and short-term investments were $6.7 billion, increasing about 11% from the end of 2019. Next, we'll discuss major opportunities and tailwinds for Pinduoduo's future growth. To start, the total spending of lower-tier cities on e-commerce reached that of Tier 1 and 2 cities for the first time in 2015, demonstrating the potential growth in lower-tier cities, which Pinduoduo has been targeting. Mobile shopping is another major tailwind, becoming the dominant form of online retail in China as consumers increasingly use their fragmented time to browse and shop. The mobile internet population in China was 872 million in 2019 and is still increasing. The ability of consumers to conveniently shop using their mobile devices has contributed to the rise of a discovery-based shopping experience compared with the conventional search-based model on PC. Pinduoduo also has a major opportunity in agriculture. China's agriculture market is highly fragmented and dispersed among small rural production sites. Compared to other countries, the agriculture production and distribution in China is less organized and industrialized. Small-scale farmers in China rely heavily on distributors to market and distribute the products, while distributors typically apply multiple rounds of price markups before products finally reach consumers. The multiple layers of distribution tend to prolong product delivery time, increase product spoilage rates, and reduce shelf life. The inefficiency in agriculture production and distribution has led to China's active promotion of innovation in agriculture business and distribution, in particular, encouraging e-commerce platforms to develop agriculture e-commerce business. Total e-commerce sales of agricultural goods in China is expected to reach $116.5 billion in 2020, representing a CAGR or compounded annual growth rate of 39.8% from 2015. Finally, we'll discuss Pinduoduo's risk factors. We'll highlight some of the major ones here, but if you're interested in reading the full list, you can read the risk factors section of Pinduoduo's 20F SEC filing. To start, Pinduoduo's historical performance may not be indicative of its future growth or financial results. Its growth may slow down, and revenues may decline for a number of possible reasons, including decreasing consumer spending, declining industry growth, the emergence of alternative business models, and more. If Pinduoduo's growth rate declines, investors' perceptions of its business, operating results, and prospects may be negatively affected and its share price could decline. Pinduoduo also faces intense competition in the e-commerce industry. Its current or potential competitors include 1. Major e-commerce companies in China, 2. Major traditional and brick-and-mortar retailers in China, 3. Retail companies in China focused on specific product categories, and 4. Major internet companies in China that don't operate in e-commerce businesses currently, but may enter in the future. Another risk is counterfeit products. Pinduoduo has been and may continue to be subject to lawsuits regarding counterfeit, unauthorized, or infringing products sold or misleading information available on its platforms. Government regulation may also pose challenges, such as the 2020 antitrust regulation regarding China's internet platforms. For example, if more limitations are placed on internet platform subsidies, this could impact Pinduoduo's ability to sustain its low prices, a key aspect of its platform that attracts new users and drives engagement. The Holding Foreign Companies Accountable Act also raises a delisting risk of foreign companies from U.S. stock exchanges that do not comply with the Public Company Accounting Oversight Board. Finally, as with many foreign companies that list on U.S. stock exchanges, Pinduoduo has a complex VIE structure that poses another risk. Pinduoduo has major tailwinds and investors behind it, however, we'll have to see what happens moving forward. Subscribe to stay updated for new videos, leave a like, and comment down below what companies or stocks you'd like to see next.